Hello traders, Vladimir here from Home Trader Club. Welcome to our weekly Forex forecast. Before we begin, as always, big thanks, thumbs up to 8K Broker for supporting our community. To enjoy all the amazing offers we have with 8K Broker, including the access to Home Trader Club, all the trading systems, the SRS Pro, the Forex BBB Pro, all the indicators and trading tools from our marketplace, private mentoring sessions and more, please refer to the link below this video in the description. Euro dollar is our first instrument for this week. Last week we discussed about this bearish divergence that is forming on the euro dollar, and we eventually expect to see the bearish move down. I believe these conditions are yet forming, and I'm not quite fully confident to say that the rally is over, because there is a chance that the euro will try one more final spike before the big reverse takes place. Take a look what happens here if I use the Bollinger Band indicator, our custom Bollinger Band indicator. We have an amazing area here with the Bollinger Band duplication zone. All that happens to be between the supply area and the broken support that acts as resistance. That's why I believe this is the zone when the euro is going to form its move down. However, if we examine what happens on the lower time frame, that basically nothing happened this week, and everything is despite the fact that the Fed did hold the rates this week. We also saw, it's irrelevant to the euro, but fundamental wise, right? We also saw the UK holding the rates. We saw Japan keeping the rates around the 1.050. We saw in Switzerland they cut the rates to 0. It was a very, very busy fundamental week, and yet it somehow turned to be flat. But with this analysis, and despite the news that the euro does not drop, there are two main scenarios I see here. First of all, we saw the supplies on the weekly chart, we saw the daily divergence that it is forming. So there are two scenarios on the euro. For the bearish one, we are forming a zigzag, so which means two waves down. If that follows with two waves up or any sort of a range and get the break, we are very likely heading to see the euro dollar completing the ABCD, and from there possibly to rally again. For the ideal scenario, the euro dollar should follow something like that, complete another false breakout, maybe even more than one, so something like that, 1 and 2, and from there make the big reversals to the downside. So with all that in mind, the way I'm looking to sell the euro dollar at the end of the rally, I want to see this final peak, like to clean this trend line and highs. I want to see that, ideally another high for the divergence, and then most likely we should see the euro dollar going back to 114, maybe even 113, maybe even below that, but that would be the initial place. However, as I mentioned before, if it does not complete the rally but makes the range or ABCD correction and breaks it down, I believe it opens the doors to the 114, 113 next. In terms of numbers and the percentage change on the euro, so it's very positive on the months. Even 7 days is still 0.8% to the upside, so it speaks for itself. The momentum is bullish, slowing down, but still bullish, and that's why the expectations are accordingly. Next one would be our pound dollar. Last week we were talking about the expectations to see with this bearish divergence. We wanted to see the break below the recent trend line, rally, and from there a sell. So with the pound behaving pretty much similar to the euro, we do have the pound making this beautiful bearish divergence on the MACD. Therefore, the expectation to see a corrective structure. Corrective structure is either A, B, C, D, or anything like a range before the market decides what's next. My view on the pound dollar for the long term, that the rally is not over. I believe that after some correction, the pound should rally further. And I do think that later or sooner we're going to cross the 137 and with high probability retest the 139 up to 141 zone, maybe even beyond that. On a shorter term, these bounces are likely to happen, welcome to happen, which after I believe it's time to buy. So on a shorter term view, I think the pound dollar should complete the corrective structure here, either ABCD or a range once again. Once we develop some bullish divergence and some bullish sign, it will be likely time to start and looking for the rallies. In terms of numbers, we are mixed. The month is flat, the 7 days flat, I mean below 0.5% change. So the 24 hours, that's why the market right now is in kind of decisive or designing waves before the next move taking place, and that's why corrective move at the moment would be simply ideal before it flips to the upside again and continue with the weekly trend. Next one, dollar yen. We discussed last week of one of the scenarios we are following, that we get the rally close to this zone here until it will get and complete this divergence. So this scenario is still following at least for the moment, and I believe that the dollar yen is very capable on a short term doing that exactly. We have a very strong supply zone here up to here, as where it was a little consolidation here before sellers took control. So as long as this zone holds, I think on a shorter term we could actually see bounces to the downside. However, on the longer term scale, there is a chance that we are heading here either for the range of the daily chart and then break to the downside, or we will see that the daily completes sort of two waves here with some bearish divergence and then looking for much bigger sales. This or other way around, for me, it is sell these rallies either from this zone which we saw as a supply or slightly higher, and take a look on this key trading level based on the volume profile. This is our KTLI indicator. From one of these levels, I believe the dollar yen is a sell. From the numbers and percentage change, the months and 7 days are bullish, 1%, above 1%. The monthly slightly below the percent on the 7 day. 24 hours starts to slow down, which usually teaches as the numbers start to shrink in a bullish momentum, usually teaches us that the peak is not far, and that's why for me, at the end of these rallies that are happening, I am after sales. And on a shorter term, basically, I would be looking for the classical signs like always. We already start to develop here a bearish divergence, so I'll be waiting to see these signs, a bearish divergence, some fake highs, right? We have the trend line here, fake highs, and from there looking for a sell-off, classical based on reversal trading strategies. By the way, I really recommend you watch this video here if you are interested learning more about the trading strategies. The final one is gold, a follow-up on our previous week discussion. We predefined this one as overbought conditions, which is why I believe looking for the sells have much bigger chances than for the buys. We are overriding on the upper Bollinger Band here, which is a strong bearish pressure. It's only question of time until we start to see the sell. On the daily chart, we saw already in this place, let me just hide these levels for a moment. We saw already daily chart making ABCD to the downside and now some sort of a correction. So if we manage to break that down, go below this low, I believe this is a beginning of a strong sell-off, very possibly back to the rising trend line, maybe even beyond. If not, there is a probability we're gonna see here another possible fake high for a bearish divergence to complete, higher highs on the chart, lower highs on the MACD, and from there a sell. So right now, as you can see, during the week the gold was not doing much, like most of the market. A lot of the gold moves at the moment will depend on everything happening with the Middle East, with Iran and all the war and all that, how it affects the market. So that's why it's slowing down right now before it will gain the momentum to one of the directions. So once again, if we manage to break the key lows, then sell the rallies becomes a classical trading plan. Until then, there is a very strong probability we're gonna clean the last high, or at least get very close to there before the next sell-off actually takes place. That will be it for this video. I hope you find value in this trading opportunity. If you do, please don't forget to hit the like button and subscribe to our channel if you are new to the channel. I also want to invite you to our trading family, Home Trader Club. Get your access to our full comprehensive trading courses for beginners, for advanced, full and comprehensive media zone, real-time trading education, real-time trading opportunities shared with you in our dedicated channel. Join our family with the link below this video in the description. Thanks for watching. Best to you and yours and good trading. Bye for now.